Alright traders, this is Taylor checking on in with the free video here for Friday, July 16th. So, after a little bit of back and forth, after a couple brand new all-time highs here, market came in a little bit here to end the week. So if you look at the S&P 500, it's an absolute beast as of late, but your energy sectors, your transportation sectors, the small caps, they're all losing structure a bit here, so that does put a little bit of pressure on the market, especially as the QQQ, your recent leadership, comes down to earth a little bit as well. So, looking at the SPY futures here, a close under the daily AEMA, the blue moving average, that does open the door for a flush down to the 21, and quite frankly, we got the pull back to the 21. So as we head into next week, that is going to be your key level of support here. Now, just thinking in terms of how bullish this market has been, I can certainly see us just getting this quick flush back to the 21, volatility dies back down, and then you're making the next leg higher into new highs. So I can certainly see that being the outcome. At the same time here, you want to keep an eye on things like energy, like the transports, all the other sectors as they potentially lose structure. And then, of course, you have to take a look here at technology. So without a doubt, this is your recent leadership as it fired that daily squeeze and it fired that weekly squeeze. So, pretty much here, this market has been Amazon, Microsoft, and Apple. So there's your leadership. And the Qs here today, again, after hitting a brand new all-time high a couple times this week, a close under the daily AEMA. So that does open the door for a potential flush down here to the 21, which does give you a little bit more downside. So, those are the two big questions. Do we get the full flush to the 21 EMA? And then the second big question is, do we move lower from there, or is that where we find support? So, my thought process is this is still a bullish market. So any potential pullback, I'm going to be looking for levels of support, and I'm going to be looking to potentially take a few different positions out there. So I am a big fan of technology here as they potentially come back to the 21 EMA. So Amazon, I think, is kind of the perfect example here. In the whole, the market is always going to give us, these important lessons time and time again. I think the most important lesson the market has to give us over the last, handful of weeks here is there's a time and a place to get aggressive and take a bigger position size. There's a time and a place to really make some progress in your account. And then there's a time and a place where you really want to scale down in position size, and your number one job is, call it, profit preservation mode. Profit preservation mode. So, nothing sucks more than when Amazon's going up, we're killing it, we're making money, and then as soon as Amazon pulls back, we give all the profits back. And then when Amazon rallies, we kill it, and it pulls back, we give all the profits back. So a huge component to trading successfully is being in rhythm with the ebbs and flows of the markets and knowing when to take that bigger position size, that aggressive position, and catch that high probability move and grow your account. And then when is it better to scale down a position size and keep things small? And this market is a perfect example. As Amazon comes back down to earth here, as the S&P 500, the QQQ potentially come down a little bit, that shouldn't sting. In other words, you shouldn't be taking too much damage here on the pullback at the 21 if you did your job of getting long Amazon aggressively at the 21 EMA and taking those profits into that aggressive push here. So as I look at the Qs, as a swing trader, when that weekly squeeze is setting up and that daily squeeze is setting up back here at the 21, there's that moment in time, right? Everything's coming together. That's where I think you can take a bit of a bigger position size and you can make some meaningful progress in your account. Once we're up here at 2 to 3 plus ATR, you're drastically going to scale down on position size. So I think the position sizing decreases the further above the 21 you get. That way, you want to keep trying to milk this momentum. Look for an hourly squeeze. You can go for it. But the beauty here is that if you take your bigger position here, you bring home some hefty profits on the push into 2 to 3 ATR. If you scale down a little bit and play things small until the next pullback, when the inevitable does happen, you're not wiping away all your progress. So, if you make 10, 20% on your account on that kind of push, if you want to try to milk the tail end of the momentum here, you can risk 2% on a trade, and if the 2% goes against you, you're okay giving that back. But if on every dip here you keep loading the boat, aggressive position size, and just keep trying to bring home the big money, then it is so easy to give it all back on the pullback to the 21 or lower. So, this coming Saturday, I'm going to be doing a class here talking about my approach to trading, which really is just boiled down to following a simple checklist. And the beauty of this checklist is it's only going to have me getting aggressively long when it's that proper moment in time. The checklist has me taking profits when I should be taking profits, and most importantly, the checklist keeps me small with very little risk on the table when I need to be in profit preservation mode. So because of the rules of the checklist, I took a couple scratches this week on Nvidia, a few other small positions coming against me, but I did my job on the push up. I made the big money on the push up. I'm playing it small here. I'm protecting those profits, and that's all in the rules of the checklist. So we will put the link in the description of the video here for the class tomorrow, so y'all can check that out. That is tomorrow, July 17th, and we also did a bonus class this afternoon, Intro to Put Credit Spreads, which if you sign up for the class, you'll get access to that as well. And then we are doing a few different live trading days here with a few of the different packages on July 21st, 23rd, 26th, and 30th. So if you want to learn a little bit more about that checklist and how to have that rules-based approach to trading where you're eliminating the thought process, you're eliminating the emotions, the opinions, and just following some rules, definitely come join us tomorrow. So I appreciate y'all. I hope you all have a good weekend. I look forward to seeing many of you in the class tomorrow, and I'll talk to you in the next video. What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.